Ed Yardeni is with us, President Yardeni Research. Ed, good morning. Great to have you with us here. Thank you very much for your time.
Sure.
Uh, Ed, I just want to start with something we don't talk about very often, which is gold. A best start to gold since the 1970s, 7%
Right.
since the tariff pause. Well, that's great news, but gold typically goes up in times of uncertainty. So if gold is doing
Absolutely.
so well, can everything else do well as well?
The answer is probably no. I think gold has to be in a portfolio as an offset to all the turbulence and uncertainties we have impacting all the other markets, the financial markets. Certainly, stocks and bonds have been volatile. And as a result of that, I think owning some gold, maybe a lot of gold to offset that volatility is an important thing to have in one's portfolio.
Uh, okay, so I mean, this kind of sharp move, not
Yeah.
not exactly a great thing, right? I mean, in terms of just if you're
Yeah.
trying to
Well,
gauge what kind of sentiment is.
it depends if you own it, it's fine.
Yeah, if
We've
you
been we've
own it.
been we've been recommending positioning in gold since it crossed above 2,000 last year, and just looking at kind of the channel that it's in, it could get to 4,000 by the end of this year, and if it gets to 4,000 by the end of this year, I'd say the momentum could carry it up to 5,000 next year, and that's just a bet that. If Trump is going to upend the old world order, and now what we have right now is the new world disorder, nobody really knows how this will all play out. And that could be a protracted period of uncertainty that's been unleashed by Trump's tariffs. So I think gold continues to do well. I do believe that there's going to be some resolution of this tariff issue by July 1st. Remember,
Yeah,
on April 9th, the president postponed the
yeah.
reciprocal tariffs until July 1st. I think there's going to be some good news along the way, and that should help the stock market. But I think gold will do well because central banks continue to buy it.
Ed, I was talking to somebody on Friday, and we were just chatting about what's going on. He said, "Well, the failure, it's the the inability to make money in the market is now just a failure of imagination, a lack of imagination." Because
It's always
who
good to
knows,
have
right?
imagination. It's always good to have imagination. But look, it's
No, let
been a
me.
great.
So my question is this. I
Go
mean,
ahead.
this entire question of what
Yeah.
happens. Trump constantly threatening to fire. I mean, not threatening to fire. He says, "Well, he'll be gone if I want him gone." Now, if something like that were to come to a bit of a head, what happens? I mean, what's the thing to do? Gold. So the conversation was in that context. So I just wanted your thoughts there.
Well, look, right now we have a trade war. That trade war could turn into a currency war. And in addition to that, we have the potential for actual wars. There is a war going on between Russia and Ukraine. The Middle East situation remains on the boil. It's conceivable that there still will be a military choice made by the United States and Israel to neutralize the nuclear facilities of Iran, and of course, China and Taiwan is a major issue. Before the election, Trump was interviewed by the Wall Street Journal about how he would deal with Taiwan, and he said he wouldn't do it militarily. He would just slap a huge tariff on China if they tried to invade Taiwan. Well, the problem is he's already played that card. He's already imposed a huge tariff on China. So China now, from a geopolitical perspective, say, well, what else he could do? What else could he do to hurt us? Let's go and instead of practicing a blockade of Taiwan, let's implement it.
Right. Purely out of curiosity, how much of gold's outperformance would you attribute to its own outperformance in the sense that a lot of people are buying gold because it's doing well, or how many of them are buying because of the uncertainty in the world? Street is worried about the financialization of gold, so to
Yeah.
say. They've started looking at it more as a positioning than any sort of protection from the uncertainty that we're seeing. So I want your thoughts on that. And,
Well,
while everyone's moving towards gold, are there opportunities in any equity markets in the US or the world?
well, I think what you mentioned before that sometimes investing could be just simply running out of imagination. There's doesn't seem to be any rush to be loading up on stocks here, at least in the United States. It looks like we're going to continue to kind of churn here, maybe be very choppy to the sideways. Bond market looks like it's, despite its volatility, it looks like it's settling in around 4.5%. And meanwhile, as you said, gold is a hedge against all sorts of things like inflation, like political uncertainty, like global chaos. And we have all those things in place right now that continue to favor gold. Clearly, it could kind of feed on itself. And, it's interesting that recently it's going up faster, almost at a parabolic pace. And that's usually an indication that it's due for some sort of correction because somebody's getting in at the top, at least on a short-term basis. But I don't think this is a top. I think if there is a correction, it'll be an opportunity. I think there's a potential for gold to go higher. Again, simply because there's a lot of central banks of countries that don't like the United States, don't get along with the United States. They really just don't want to have dollars in their reserves. So they're going for gold, they're going for euro right now.
Ed, we're at the mercy of all the trade negotiations. Last week, it was Japan holding high-level trade talks with the U.S. This week, it's South Korea, visiting the U.S. with trade negotiations in Washington. In the emerging market basket, what is the approach now, and where does India feature?
Well, I think India is right at the top of the list of countries that the United States wants to have a deal with. The thing is, it usually takes a year or 2 years to negotiate trade treaties. There's so much involved. I think in this case, the administration would just like to have a piece of paper that's signed by various countries agreeing in principle to certain things like reducing their tariffs, like reducing their non-tariff barriers to trade. And I think the United States will get that. I think the president is going to declare victory by July 1st. And with regards to India, I think that'll be the case as well. I think what's happened very helpful for India, certainly in the stock market, is a realization that unlike China, India has a much greater potential for growth domestically, whereas China's got the demographic issue is a negative. In India, the demographic issue is a very big positive.
And this despite the valuations at which India trades at right now?
Well, look, there's a lot of money in the global system that would like to be invested. Not everybody wants to be putting it into gold. Not everybody wants to be putting it into treasury bills. And meanwhile, U.S. stocks are still relatively expensive and volatile. Bond markets become somewhat more unpredictable. The whole concept of U.S. assets as a safe haven is being challenged right here. So, yeah, I think global investors are willing to pay up for India because they perceive that India is maybe has a more stable economic outlook and a more positive economic outlook than maybe many other countries around the world.
That point that you said, right? He just wants to declare victory, he's put tariffs so high that he's got so many ways he can declare victory, right? He can declare victory at, if the tariff is 150, he can declare victory at 125, 100, 95.
Doesn't really matter.
It doesn't matter. He can do it. Absolutely. So in a way, someone we were speaking with, I think 2 weeks back, said maybe, it's hard assets and EMs. And in EMs, India is right at the top in that sense. Makes sense, Ed?
Yeah, I think there's a lot of things that don't make sense right now. And I think the whole tariff issue we're all confused about because we really don't know what the administration's end game is. It's not even clear that the administration has an end game. So in this kind of environment where people are looking for some certainty, for a while there, it looked like they were jumping out of U.S. assets and going into China and into Europe. Now I think there's a realization that, well, wait a second, these are the areas where the trade war is most intense, and less intense is probably going to be the trade war between the United States and various emerging economies, especially India.
All right, Ed, very good conversation and very good primers to start the week with. Thank you very much for joining us. and running us through your views and your perspective.